Let's look at taxes. In section 2.5, we are looking at income taxes. In example 1, we are looking at Maria. In 2022, Maria earned wages of $86,450 for her job as a server. She also earned $8,300 in tips and received $95 in interest from a savings account. She paid $1,400 in student loan interest and put $3,500 into a 401k tax-deferred savings plan. She is unmarried and living with her 6-year-old daughter. She also contributed $1,000 to charity and is eligible for the $4,000 child tax credit. If Maria's employer withheld $4,135 from her paychecks, determine how much she owes in taxes this year, or the amount she will receive as a tax refund. With taxes, we have 5 steps. Step 1 is to determine the gross income. As a reminder, gross income includes all wages, tips, earned interest, dividends, rents and royalties, alimony, property gains, income tax returns, etc. The things that Maria received in 2022 that fit in that category would be her wages, her earned tips, and the interest she received on her savings account. To determine her gross income, we would take those 3 numbers and add them together. Step 2 is to determine the adjusted gross income. The adjusted gross income is determined by taking your gross income and subtracting your adjustments. The adjustments are things that we pay into that would reduce our income. Some examples of that would be a tax-deferred savings account, such as a 401k or IRA, school tuition, student loan interest, moving expenses, business expenses, flexible savings accounts, and health savings accounts. For Maria, that would include her student loan payments, and her 401k. This means we can take the gross income and subtract her student loan interest and her 401k payments and determine her annual gross income. Step 3. Once you have your adjusted gross income, now you can determine your actual taxable income. The taxable income is what we will actually use to determine how much taxes we need to pay. Your taxable income is determined by taking your AGI, your adjusted gross income, and subtracting the deductions. There are 2 types of deductions that you could choose from. You have standard deductions or itemized deductions. Since Maria is unmarried with a 6-year-old daughter, this makes Maria the head of household. The head of household in 2022 has a standard deduction of $19,400. If Maria would like to itemize her deductions, her itemized deduction would be the $1,000 she's paid to charity. Of the 2 options, you would want to go with the one that is highest, because it will save you the most money, which means Maria will choose the standard deduction to determine her taxable income. We'll take the AGI we determined from step 2 and subtract our standard deduction to get our taxable income. Now that we have our taxable income, we can determine how much taxes we actually need to pay. Step 4 is where we calculate the taxes owed using the current year's tax table. There are several tax tables for each year, and the one we use is based on our tax status. Maria is head of household since she is unmarried with a 6-year-old. So to calculate Maria's taxes, we would use this tax table with her taxable income. This tax table has us using different levels of how we pay our taxes based on how much money we make. Maria, as we said, has a taxable income of $70,545, which puts her in the 3rd bracket at 22%. However, she's not going to pay 22% of the entire taxable amount. She's going to pay it based on these brackets. We will spend a little bit more time in class looking at what these brackets mean and getting a deeper understanding of how this works, but we'll look at just the numbers and the math on how these works today. So we'll start with the first bracket, which is the 10% bracket. Any amount up to $10,275 is taxed at a 10% rate. So we'll multiply that by 10% and get $1,027.50. If a person makes more than that, anything above $10,275 but less than $41,775 is taxed at a 12% rate. In order to find how much that is, we have to subtract $41,775 from $10,275 and multiply that by 12% to get how much we will pay in taxes for that second bracket. Maria is in the third bracket because Maria makes more than $41,775. So Maria will pay 22% of all money that she makes above $41,776. To figure out how much that is, we subtract $41,775 from her taxable income. That'll tell us how much money will be taxed at 22%. To calculate Maria's total taxes, we'll take those three amounts, combine them together, and get $11,136.90. Before we look at the effective tax rate in Part D, I do want to go back and look at Part B again. And I want us to note the 10% bracket gave us $1,027.50, and the 12% bracket gave us $3,780. If we were to combine those two amounts, we'll see that their sum gives us $4,807.50. That happens to be the number in the third bracket next to the 22%. It says that the person in that row will pay $4,807.50 plus 22% of the amount over $41,775. So going back to the effective tax rate, to find our effective tax rate, you kind of think of it as being an overall tax rate. We take the taxes owed and divide it by the taxable income and turn that into a percent by multiplying by 100. So that's $11,136.90 divided by $70,545 multiplied by 100, giving us 16%. Step 5 is our last step, where we're going to determine the amount of taxes owed or refund amount. We're going to take the amount of money we got in step 4, where we calculated the taxes owed. Using the amount of taxes we calculated, we're going to subtract any tax credits we are eligible for, as well as any withholdings our employers took from our paychecks each pay period. For Maria, she is eligible for $4,000 in child tax credit, and her employer withheld $4,135 from her paychecks. If we subtract that from the $11,136.90 that she owes, we will see that she still owes $3,190. When you do step 5, once you do your subtraction of your tax credits and your withholdings, if your result is a positive number, you still owe money. If your result is a negative number, you will get a refund.